Hey, good morning, everyone. We're higher again. And where do we go from here? Well, I suspect we're not getting out of the trading range, but so far it continues to move up. So where are we? Let's see where we're at and where we're going here. Factory work. So gapping above first resistance, which was this pivot high here. And the price action has been overall bullish, not wildly bullish. Most of the move has been, as you know, probably has been in tech and banks holding things back. Some reprieve there the last couple of days. So market took that as risk off. So gapping above this high slightly, which opens up the door to the next high, which isn't all that far away, but is it doable today? It could be. It could be. So far, just consolidating up here. Right, so let's just make a view here again. It really hasn't moved much, I guess, in the last over an hour or two. Just been going sideways here. Little blip to the downside and up above these pivots and stalled right away. So it's not overly enthusiastic, but the S&P's moved up in an erratic way. I mean, it's just been that way for a while. The good thing is it's gotten up to the top of this big nasty red bar, which was a news day. I think this was the Fed chairman day speaking. And so hit support, back up again. So a little trading range, easily seen on the hourly chart. Little consolidation yesterday, positive. It didn't fill the gap. It stopped. What was resistance became support. And you can see the little bottoming tail bar, and it stopped at the next resistance, and now it's getting over that. So, as I said, opens up the door to the next pivot line as long as it stays above yesterday's low. That's pretty tight, but with that kind of price action, it needs to stay above yesterday's low. And ideally, since it's gapping above this high, pullbacks into yesterday's high should be where buyers want to step up, give or take. It can, pull back a little bit, so you see the 400 line. We've been talking about that big 400 area, 4,000 strike in the S&Ps. It hung there as it got through. There came the buying, and now it's a little bit above it. So 4,000 should be where it holds. Breaking below here would sound an alarm for longs because it shouldn't do that. And you can see it's up 3 weeks into the top of this weekly red bar. So positive there. Let's drag this up and turn it green. All right. Paid attention to that in a little bit. So just duplicate this. And we're still in a trading range. Now, one of the things I mentioned in the newsletter over the weekend, you see patterns and say, okay, this can go one way or it can go another way. And one pattern that still might play out, I don't know, but we're here to talk and make everyone aware of thoughts, is the possibility of this. And it went down, right, becoming head and shoulders top. I don't know. Right. But I'll share that thought with you because as this comes up here into this resistance area, then we'll see if it begins to make a turn and can it eventually work higher or not. So I'm looking kind of far out there, but look, we give thoughts and then we see what patterns actually play out over time. But that's one that is a possibility. And one of the reasons that we're potentially thinking that there's a couple of reasons. Well, breath has finally gotten positive. That's a good thing. And we're saying how long it was down here below the zero line. So yesterday it pushed up, which means other stocks other than semis and techs began to participate yesterday. So the rally became a little bit more broad-based. That's a good thing. Sentiment is still neutral, so it's not up in the red. So we'd say there's some gas in the tank there for option traders to now start buying calls. So this isn't that extended yet. It's above 100. Actually, it's what we want to see at this point in time. And we want to see, if this is going to continue, option trading on the call side start to pick up. All right. Take a peek at the futures, and you can see they're pushing up into these pivots up here. Resistance. So on a short-term basis, coming from this consolidation up into the pivots, it's at resistance. There's likely to be sellers. It's not going to be a no-brainer long scenario today. Something else, semiconductors, which have been leading. Where are they opening? Up into resistance. They're up a few weeks in a row. We mentioned the volatility index yesterday. It's moving lower, as it should. It's down near the lows where it's popped up from before. Be aware. It could come down lower. Just because it's low doesn't mean it can't go lower, or that it cannot stay low. So another positive that it's moving down, but at a level where it's turned up from before. All right, SPX. All right, where are we at? So prices are opening up here at the dotted line. That's yesterday's close. Ranges have contracted a bit. Now we're looking at around 54, 55 points day to day, which puts us, let's say the extreme, right, would be down here, which is, well, this is the open, but this is yesterday's close. If we go from the open down here and down below 4,000, and yes, I looked, 4,000. Okay, it's 85 by $1. You can go through 39.95, 70 by 80. It's below 4,000, so 4,000 should become support. It's not that far away, but I mean, it does have to travel from here, get to 4,000, which what was resistance should become support. Now it's yesterday's low. So we know if markets are even there, there's trouble brewing. Keep an eye on the VIX, see if it's rising, which it would be if it comes down there, but you better be on your game if this is falling and you do below that 4,000, which theoretically it shouldn't get there. And 4,090, that's the high, which you see. Okay, so 50 from yesterday's close, we'd put it here, and from the open, if it was to move that much, we'd put it right about there. So the numbers aren't no-brainers, but they are at the extremes, right? We'll change this to, since it's gotten better, all right, 995. It's at the edges, right? Sometimes different markets sit so far away. That's why I call them no-brainers, right? Okay, let's look at other markets. Up at resistance, and it's stalled there. Right? We always look to the left, and if you look at this from an hourly time frame, that's a hell of a run. So to think that it's going to keep running like that without some kind of sideways movement or consolidation intraday, that doesn't make sense. It's in a trading range. It went from the bottom of the range to the top of the range. Now, if we can get some more bullish price action intraday, maybe you get a rally at the end of the day. And so the same way we look at this and say, okay, it was whippy and erratic, but it was at resistance and holding up pretty darn well, other than the whippy price action. If we can get that intraday, the same concept applies. And then we could look for prices to go higher. And then, maybe into next week, maybe up to the prior high, which would just put things at the top of the extreme part of the trading range. As we know, the Russell has been crushed. It's up at resistance. So you got multiple reasons to be cautious here, even though we've got this bullish price action. Bottom of the range, top of the range, semiconductors at resistance, Qs at resistance, hourly chart extended. Don't be thinking jumping all in so fast. The Dow, it's eating away at this nasty break, but it's into resistance coming into that. It's got some room to move higher. Hourly chart, little consolidation there, but again, short-term extended. Also coming off the board. McGraw's telling me and everyone in the chat room here. By the way, thank you. Jake shares information on social media and lots of people share information here in the green room. We're a team. Works out really, really well, helping each other. All right, so he's saying there's non-strength for options. Next week, a lot of calls come off the board on Friday. So McGraw, that being the case, they could reinitiate them at the end of the day, Friday or on Monday, I suppose. Like a lot of this open interest at 4,000 that was on the quarterly options expiration. Some came off and then they put it back on. So it hasn't been a no-brainer market environment for sure. All these overlapping bars and erratic price action. There's a lot of uncertainty, the banking thing, interest rates, and so on. And I guess we're going to continue to deal with that. 10-year, not really doing much of anything. Mentioned yesterday at the end of the day in the room, TBT hit these converging moving averages and flip back down. You want to keep an eye on that since this moved down. Should it move back up, I would see that as being a bearish sign. And hey, if it's moving down, let's look at it as positive. 13-week doing nothing. So bonds really not telling us much of anything. Metals, silver pushing higher, coming into resistance. Nice run off of that wide range igniting bar. Gold doing nothing. So silver playing some catch up. Crude oil into minor resistance. But look, overall, the market, while erratic, breakdowns are failing. Now, this has been in a decline for quite a while, and this wide range bar did happen into support. So this isn't totally surprising, but you would think this $80 level, give or take, should be a pretty stiff resistance area for crude oil. Bitcoin at resistance and initially getting a little rejection up there. So again, the theme today is while things still look pretty good, would be careful about initiating new positions without proper money management and probably decent sized stops. We found a lot of nice bottoming patterns yesterday near the close in the green room. So those bottoming patterns, there's a lot of opportunities, it appears, especially in the software sector, for these stocks to play catch up. So while there's always the cautionary disclaimers and reasons why we should be cautious, volatility index, breadth being where it is, so on, which we've covered, there's still a lot of good patterns out there that suggest certain stocks can begin to outperform, or there can be this rotation, right, from maybe some of the ones that moved up quite a bit to some of the ones that haven't. So there you go. All right, those of you in the green room, I will be out for most of the day. I'm going to try and get back before the close, but Dan will explain. And we'll talk later. I'm fine. Just a 10-year procedure, if you know what that is. But I got to run because I got to be there at 10 o'clock. Routine.
Good morning, everyone. Hey, Stephen, I think that means we get to goof off more than usual. You like how I say more than usual? So I was bullish yesterday. It turned right on the pre-market overnight support. The spiders did. I just raised the stop here on this 8-9. And I said, based on the close, we look higher, and we're the deeper we get into this weekly bar. You know what it kind of reminds me of now? Do you remember when the markets just kept running in the face of Powell and not caring about rates rising? Who cares? We think we're smarter than you are, and the markets are just jumping ahead. I kind of feel the same with these last two gaps here today. And, really the strength over the last couple of weeks, it's like negating this credit crisis that started with that SIV bank. So there's the fear is kind of out the window again. And we're chartists, but, we all want to make money, and we're all thinking, is this the bottom? Well, sure, we're always suspicious, and we monitor suspiciousness with our internals and bar by bar analysis. But what I'm saying is things look pretty darn bullish right here. Yeah, we're getting at extremes, as Greg explained with the charts and the internals, but this pattern to me suggests last week's low, major pivot, should hold for a while unless there's more bombs. Well, not a real bomb, but a bomb of a story. All right, so I've been adjusting all our opens. They look great. I posted a few new trades pre-market. Let's just go through here and cover as many as we can in the next 12 minutes. Workday. This was a beautiful long we entered yesterday. We actually sold another third at $200, either last night or this morning, whenever you got filled. So we have 1/3 that we're trailing. Rocket I posted over $9, looks great. NET, I just like the tight volatility here. I see it gapping up over yesterday's high. That could be a 1 to 2, 3 day swing trade, whatever. This SEM was rocking yesterday. Beautiful bottoming pattern. It came out of the gate with a nice 15-minute igniting bar. Some folks in the green room were trading it, and then I learned subsequently that it has to do with some news of Intel here, merging, buyout, whatever the case, and they got some type of approval. But look, Intel has been on my core long list. Look at that new low reversal, double. Not a textbook double bottom, but a beautiful retest. So it's just trying to get on board and where your stop's going to be. Garmin, or here, Zoom, another bottoming pattern, gapping up. Let's put spread idea. Garmin's breaking out on the daily. That's a long idea. And QQEW, Alex mentioned yesterday, the equal weighted Qs look great. I mean, look at the Qs, look great. The way they shrug off this regional bank problem, this is bullish daily, weekly, monthly. How can you think anything different? You can't if you are being honest to the message of the charts. Every time frame's bullish. Disney, sure. Yeah, low bottoming pattern, sure. Let's put that on the list. All right, these are earnings, a couple earnings here. This RH was a potential double bottom. I actually sold the 205s yesterday into earnings for 95 cents. And even with the gap down, there's 99% certainty I'm going to have an open gain. I'm just bidding 10 cents, see if I get popped, and then 5 minutes later I will come back and see what the true market value is. This is another beautiful double bottom. I don't see any prints though. It's lighter volume. Walmart, I don't know what to do with that, Thomas. It's up a lot, gapping up. You know, there were so many double bottoms, like Jets yesterday I mentioned. Look at that cruise ship here today. Sam gave me this as a short idea, which I was watching under 60 bucks. And now it failed. The other cruise ships are looking better. Look, there you go. There's a bottoming pattern. McGraw asked me about some bottoming pattern. McGraw, do you remember what it was? And then I gave him like 20 others that were substantially better. Now this is not a multi-month bottoming pattern, but it's a nice curled building of support over time on major support, red bars ignored, closing breakout with a price void. So that looks fantastic. Full no pattern, deleting you. CCL. Same red bar. In fact, Greg even mentioned this exact thing yesterday. He says, I wonder if it's going to trade above this red bar and be a shock pattern, and then we have a price void above. DKS. I don't like the way it came down from a square top, but over yesterday's high, day trade's fine. I haven't. It's a consolidation and a downtrend with no something bar. So look at Baxter as a more mature bottom. Say McGraw, I like when the 20 MA flattens out because it's telling me that the last 20 bars price is now above it. It by definition is short-term stabilized. Well, I didn't see any volume there, Alex, so I don't trust it, but sure, we can keep an eye on it. VRNT, I don't see any pattern or gaps. This one's getting whacked down to, wow, that's a nasty gap down to 25 bucks. Look at this other cap on the monthly. So I don't know what this stock is, but they're having some troubles. Papa Lima, short-term bottom, gap in the 270. You might get a day trade out of that. Crust, Thomas. Yeah, closing breakout. Sure, it's a beast. See how the 20 MA flattened out? See, this is a good example of moving average analysis. Look how they were all converted. The 200 was flat, rising 20, 50. So this is telling me it's still extended on a bigger time frame, the 50 this far, but this 20 MA flat with this downside shakeout is telling me that it's incredibly strong. Neox slopping all over the place. We'll come back. Manu, that came down too hard. Ango gapping down 10. That's a bearish gap. Evgo 646. It's bullish. We'll come back. CAS, another bottoming pattern on support here. Although, you know, it's different. This is more like the CCL than Baxter, where it's been going sideways for a few weeks, but it's still a tradable bottom after a climb-out. So there is definitely a difference there. Sky, I just see one print up here, but I don't trust it. But if this is gapping over these highs, that looks good. I'm actually going to put that in this window because that looks really good. Play had earnings yesterday, but we're just going to watch it because of that big old expansion bar. Here's another bottoming pattern, McGraw, 5-in over yesterday's high. I like it. Pat, I posted this last night, a little bull flag with a bullish weekly. Box there, another bottoming pattern. There's these bottoming patterns everywhere. Here's and then OMF kind of looks similar to the banks where you had this retest, but at least this one's on major support. That looks fantastic, OMF. I'm stilled. I have an alarm, yesterday's high. A Delta Mike, that's a cheaper stock, but a daily weekly are showing signs of bottoming. Dunking I posted actually as a core, half lot as a core. Look at weekly, monthly. Weekly is a sloppy buy setup, but I'm not trading the weekly, but it's still bullish. It's greater than 100% retracement, and that's holding 40, whatever, 35% retracement. I got a W bottom and a breakout and a 1, 2, 3 on the monthly. So dunking looks fantastic. Let me see what Sam I Am has here. Package. We can find better. TDW. It's up 4 bars is the problem. EPAC. Yeah, I don't know if this tail is real. I'd prefer it if that tail was not real. But yeah, that's a short. I always like having some stocks in my back pocket that are contrary to my bias. Because then when I say, okay, I'm now ready to consider a short, then these will be my go-tos that I will look at. All right, where did I leave off? Shop. I gave as a put spread and it's gapping over it. So let me tell the weekly that it's good to go. Here, actually, I posted this big old list to the weekly options trader this morning. There's a lot of good trades. Yeah, that's big old bottoming pattern. Absolutely. And Sam, see, we like when there's correction bars as opposed to 4 fluid bars up. So the fact that this was a red bar, inside bar, and now a closing breakout, I don't say, oh, Sam, it's up 4 bars. I don't like it. So because of this at resistance. So sure, let's put that on the list. Where am I? Schwab got a downgrade, no pattern. Dunking, we just talked about. Roku's been on my core long list for a while. I got an upgrade today, and it had a little breakout failure there. And I said, let it chop around for a week or two. I love the weekly, monthly workday we talked about. We're already in JD. I saw popping here pre-market 43 and change. That could be a put spread idea. I have a hesitancy of trading swing Chinese stocks. They're just totally higher risk with the government opening their mouth and messing them up. Yeah, okay, Robert. Yeah, so Robert, when people tell me that, I say put tape over the symbol if you have a compelling pattern. I mean, other than things like, wow, ticks opening up at almost 1,500. Other than things like Tesla, where you're like, look, I can't control this guy's Twitter. All right, look, I just got filled on my that bell. Sam, I Am. Were you in this trade too? RH. I was short the 205s and I just bid 10 cents and I got filled within 10 seconds or 5 seconds. And that Norwegian cruise line is ripping. All right, so our 205. Okay, so Sam, I had an excellent guess. Okay, now it was 10 by 15. Now it just dropped 5 to 10. So yeah, we got filled on the offer, but that was an excellent estimation of what I thought the wall contraction would be. All right, I got tons of alarms here going off, so let's just chill on longs. Let's take our time, go through them one by one. This little Jen, it's not ready, but it was a potential retest on shop. All right, cool. I'll post it then. And GE out. Yeah, that's kind of like dragging the market. All right, I'm going to shut down YouTubers. You have a great trading day. We will see you tomorrow for Happy Friday.